Alright, what's going on guys? Chermane here, the most disciplined trader on YouTube. We're going to do a trade breakdown over today's trade this morning. Now, in the stream in Discord this morning, we're looking for relative equal highs as a drawn liquidity. Okay, that's buy side. A little too smooth on these two daily candles, so that was our focus going in. And we're going to go to a 15-minute chart. So, Chermane's model, okay, we have our midnight opening price here and our 8:30 opening prices here. Those are our two opening prices that, okay, this model uses. Imbalance forms a high, comes back down. This is our 9:30 opening bell, takes us into that buy side on the daily chart, breaks lower. This here, quadruple top, we've also ran that out. Okay, now let's get some detail here on a 1-minute chart. A lot of factors here puts us in a premium as to why we wouldn't want to look for longs post 9:30. So we open here, trade higher. I'm treating that as a Judas swing. Okay, whenever we just open and is one directional like that into a key level buy side liquidity that forms after 7 a.m. That's your liquidity algorithmic reset, the way ICT describes it. Okay, 7 a.m. annotate that. Buy side ran out. We have a nice clean triple bottom here. But before we get to that, we run out the buy side here, hits the buy side from the daily chart. Above this high, traders are looking to go long. Okay, breakout traders, they want to go long once we get above that high. Let's add some context here. All right, so buy stops resting above that high. The moment we trade above it here, okay, traders are trapped in going long. So a lot of people ask, how do I trust going short and when we haven't, got beneath the inversion fair value gap, retested it, that sort of thing? Well, if I understand that we've trapped those traders who are going long on the breakout of that high, okay, as soon as we trade above it, they're long. So do I want to see us trade into the fair value gap and then make another higher high? Not necessarily, because that will let them off the hook. They're profiting if we make a higher high. I want to trip them in long and then run it against them, right? We also have a couple other factors that justify lower prices. Since this is a teaching covering Chermane's model, midnight open, 8:30 open, okay? If we're above the midnight opening price, we're only looking for shorts, okay? That is the rules of this model. I have a separate YouTube video teaching that. We're only looking for shorts if we're above the midnight open. Now, if we're above the midnight open and the 8:30 open, that is a deep premium. We're definitely looking for shorts. Okay, you want to get in short if this is the case, all right? Entry is above both those opening prices, and the rules state you short above the midnight open, you take a partial at a logical level, and you leave a runner for the midnight open. Okay, I didn't leave a runner here. This is the funded account. I just wanted a bread and butter set up there. All right, building that buffer. So if we go to regular trading hours, I also want you to notice how we gapped higher. So we're in so much of a premium, okay, and there's so many factors aligned. We gapped higher at 9:30 and traded away. Everybody who waits for the 9:30 open and then trades in one direction, they want to buy, because all we did after 9:30 was trade higher. Everybody's chasing that, not knowing that we just tagged a buy side liquidity level on the daily chart. We're above the 8:30 open and the midnight open, so we are in a deep premium. We gapped higher at the open. That alone puts us in a premium. And 7 a.m. liquidity reset. Okay, your highest high forms after 7 a.m. taken out. And we have nice, clean triple bottom here waiting for you as an exit. All right, so shorting above the midnight open. This is a tier 2 setup because it's above the midnight and the 8:30 open. Tier 2 short, exit there. And if you're following the rules to the T, you would leave a runner to the midnight open and you will get a beautiful exit there. Let's explain this entry a little more. How can you trust shorting the inversion fair value gap instead of waiting for it to close beneath, next candle open, trade, tap it, or you're waiting for a retracement back to the inversion fair value gap? Well, it's a logic that I just explained. If they're trapped in going long, I want to tag them in because they're breakout traders, and then I want to run it against them. So I don't want to see us make a higher high because all that's doing is bailing out the traders here. If we trade into this fair value gap, make a higher high, they're profiting off of that. I want to tag those buy stops and I want to go lower. Okay, so I'm anticipating this fair value gap to fail. Once we trade to consequent encroachment here, leave, trade to consequent encroachment again, I'm seeing that as, okay, NASDAQ is weak. Because if I'm bullish, let me slow down. If I'm bullish, okay, this fair value gap, you'll hear me say, I want to see it stay open or at least the lower half, okay? That's if I'm bullish. But if I'm expecting lower prices, I want to see this fair value gap get violated. So we trade through consequent encroachment. Is that bullish? Nope. Trade up, fail to take out the high. We're trading through consequent encroachment again. Is that bullish? Nope. Right there, once we trade through consequent encroachment of the fair value gap a second time, that's telling me that NASDAQ is weak and we're likely to just overlap this whole thing and aim for the relative equal lows down here. So I'm shorting as we're crossing through consequent encroachment there. And then it's just one directional towards the sell side. Okay, so I get a lot of questions. How come you didn't wait for it to leave the inversion fair value gap and come back up? Well, if I'm already expecting this to fail, and if I already know that we have traders trapped long here, I'm trusting that this high is going to stay in place. So I'll just go ahead and short the inversion fair value gap near its consequent encroachment and trust that this up close candle or the high won't be overtaken. So that is the trade breakdown, Chermane's model. Shorting above opening prices, taking partials at logical levels, and there you go. So hopefully this was helpful. Discord members, we have our webinar in about 2 hours, so be on the lookout for that. I'll send out the link so we can all join, and it's actually a live back testing session, so we're going to back test and do some trade recaps from this past week, and it'll be some good study material for you. YouTube community, I'll see y'all when I see y'all. All right, peace. Personal. So there you go.